we were talking off air about the performance of these markets. It seems as if investor attention is now focused back on earnings, which means more focused on the fundamentals here.
Absolutely. I think the market was absolutely priced for perfection if you see for the last couple of months. And any company which is not matching up to the expectations of those earnings is being severely punished. And I think we'll continue to see that trend. Some breather has, the market has taken some breather. We are still positive about some sectors as we head, but I think markets will give you better opportunities to get in.
Okay, so you mentioned you're positive on some key sectors. Walk me through your latest investment themes as we see some of these earnings results roll in.
So one, I think we continue to be overweight on sectors like semiconductors and healthcare. And that's been a focus area. Then within the fixed income space, we still are pretty positive about the investment grade. And there, I think duration plays a key role. We're still not going very long duration. We think if you look at the beginning of the year, there were 6 rate cuts, which was expected by the market. That rate expectation is now to almost 2 rate cuts or maybe 1 rate cut. And even the timing has been pushed further down. We were expecting probably in the first half few rate cuts will happen. Now we think probably September might be the earliest. So I think those are things that need to be washed out as you're looking into making some of the allocations to different asset classes.
Indeed, and the absolute bear case scenario here, at least from a market perspective, is no rate cuts. What do you make of that?
Very possible. And one reason for that is I think the market is going to look at more than the inflation. It's going to be the job data. So if the job data keeps coming in better than expected, then I think you don't expect any rate cuts to happen. But if that surprises, then obviously you will have rate cuts. We're also heading into the election year, and towards the last quarter, you would see that at least sentimentally playing some part in decision making. Now, how much of that is going to influence, central bankers? Nobody knows, because everybody wants to maintain independence, but it does have an impact.
Indeed. And, I've said this before, but I do fundamentally believe the timeline for Fed cuts is closing. You wouldn't want it to look too political if you started cutting rates into November. So the Fed is really in a tough place here. It's a question of credibility at this point. Would you agree?
100%. I think September is probably, if it doesn't happen by September, then it most likely may not happen this year.
Right. Just quickly, ahead of the European Open, the FTSE, can it maintain this momentum?
Very hard for me to make those calls because we don't track, specific markets. But I think, look, some pullback will happen because there was a sell-off. But I think these are very short-term calls, very hard for us to make. We really take very long-term views on markets, and very hard for me to call that out.